Hello and welcome. Happy weekend. It's been a long year. It's February 2026, and we have a lot of action, especially in software companies, and AI is taking over. And we're gonna look at something else, something different. Why is really like real assets in Denmark being priced really, really low? We will have a look at the business delivering products and manufacturing and producing insulation products manually to worldwide to the construction business, and the construction industry is slowing down a lot now, and that's maybe why the stock is cheap. It is also because they had 4 factories in Russia, where the Russian business is now kind of written off, so that is also a concern. But it's not in the big picture. It's not that important in my opinion. But I don't know the company really well. But I've been working in a warehouse and delivering or packing and delivering this product myself. And it's a Danish company, very unpopular industry now. But I think that the manufacturers here of rock wool and the products that they are using for insulating buildings, as you see here on the right, is going to be, as far as to my knowledge, it will continue to be important to insulate the buildings. And they have production in more than 40 factories, I think, and they produce this simple product and sell it worldwide in more than 120 countries. And they mention Russia 100 times in the report because it's main concern, and their profit is it looks like zero for 2025 almost, but it's mainly because of a one-time event, you could call it. This is Rockwool producing these insulation products. And it's, I think that, we have a company here that earns roughly 600 million euros a year in operating profit. And I think it is undervalued because the market, you can buy the entire business now in the start of February for roughly 6,000 million. That's 6 billion euros. So it's roughly 6 billion euros for the whole company, and it earns 600 million in operating profit, give or take. And the revenues that they had in Russia were only like 200 million, and with a profit margin normally around 10 to 15% max. It's not that important, the Russian business. So that's it's a company that has roughly 4 billion in revenues and a profit margin of 15%. But it's more than the industry, and you can buy the entire company without debt. Just buy the whole business for not more than 10 to 12 times the operating profit now. So I think it is interesting. Everybody is looking at Novo Nordisk in Denmark and at the software companies nowadays, but nobody's looking at the investor presentations of this company. So if you, for example, Google or check on YouTube when they release numbers, it's like not even 100 people looking. It was like 30 people who were checking the presentation by the management. That's a boring business, but maybe that's a place to look then. As you can see, factories, 40 factories in 23 countries, and they sell the products in 120 countries. They like to present their numbers without the Russian business, but the revenue is roughly 6-7% from my estimation. So, if you have a look at the impact here in the notes, you can see that they report a revenue of roughly 4 billion euros here, but the 260 is revenue from the Russian business. It's not that important, and from my understanding of this, they can produce the same technology anywhere in the world, really. It's too bad that they lost the factories, but they only adjust the value by roughly 400 million euros, and it is assets lost maybe 500 million euros, but they did owe them maybe 100 million or so. So I don't think they're going to pay back the debt to the new Russian owners. So that's a place to look, I think. Rockwool. What is it? Disclaimer or disclosure? I did buy shares myself in this business already. Not a big position, but I bought it at a bit lower than this price. Just lucky. You see it in the screen here. I can show you here that it is roughly 230 Danish crowns now, giving us an enterprise value of 6 to 7 billion euros. 6 to 7 billion euros. 160 million euros in net debt. They usually don't have any debt. So it's almost no debt. Normal cash flow is 500-600 million euros per year, I think, give or take. And they invest in the capex is roughly 400 million, but half of it is growth, it seems to me, and roughly 200 million is maintaining the unit volume and the competitive position. So they are using cash flow to expand and to increase their capacity. So it looks, from what I can see, that the management is optimistic. You see the cash flow has a nice trend. It's a great business without any debt, really. And the capex, they report it even in the annual statement, what is maintenance capex and what is growth. And it's roughly half or so. So it seems to me that the owner's earnings are close to, let's say, 400 million at least per year now. And then they pay dividends, you see here, and they also started buying back more stock, buying back their own shares more than before. And that is an added benefit, and it's actually good if the stock price is staying low now for a long time, if we want to be long-term owners, and just receive the dividends in the future. If you want to have a look at the multiple, you can see the enterprise value is roughly 6.5 million, 6.5 billion euros. And if you look at the ratio, and we disregard this paper, or the amortization or the loss of the assets in Russia, let me just remove a bit of metrics for you here so you can see what I mean. Here you see. Cash from operations roughly 600, and the multiple to purchase it was roughly 10. So I really like to see a growth company that has a strong product and a good competitive position, high return on equity and everything we like, trading below 10 in this multiple. And now it is maybe around 12. Depends on what is the normal operating profit. So I think that the normal operating profit is roughly 500 to 600 million if we exclude the Russian business, and probably growing when they keep building new factories, and then that's not a bad multiple, I think. So disregarded unpopular and underanalyzed stock, I think. It is owned by funds mainly. I don't see any big institutional, any big private investors here. Seems to me to be mainly, according to Fiscal, mainly funds, etc. that owns the shares. So the CEO and the management looks decent, and if you measure it in terms of the margins, they're really strong. The earnings per share is like 0, around nothing in 2025, but it's because of a paper loss because of they wrote off roughly 400 million from the almost one entire year's of earnings from the Russian business that they have lost. But I think they have strong production in the future, and I'm happy to buy more of this company if the share price stays at this level or drops lower. And if you see, you saw that the multiple is at the very low end. Nevertheless, if you look at the 10-year history, it's not bad to get the 10% annual gains from the stock price. And if you add the dividends, we have roughly 11% or so. And this is with a very low basis now, with a multiple of 10, enterprise value 10 times the operating profit roughly. So I think this is quite nice price, nice product, and have a look at the annual report and see if you agree or not. If not, I hope it was a nice place to start and do your own analysis and see if it fits your investment philosophy.